Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, Ethical and Sustainable Investing News to Profit By, for September 27th, 2019. Presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Investment ideas in these podcasts are generally gleaned from market participants in the US, Canadian, UK, European, Asian, and Australasian financial markets. And Google any terms that are unfamiliar to you. Also, you can find a full transcript, live links to content, and often bonus material to these podcasts at their episodes podcast page located at investingforthesoul.com/podcasts. Now to this podcast. Most of us listening to this podcast believe that investing in fossil fuel companies might not be a good long-term investment, for many reasons. However, we might not know the details. Well, under the title Fossil Fuel Divestment, The Financial Case by Kathleen M. Kreisel of Hanson's Advisory Services and President of the Sustainable Economics Alliance, Ms. Kreisel provides a detailed study on those details. Ms. Kreisel says this, and I quote, that we compare financial performance of investment portfolios with and without fossil fuel company stocks over the period 1927 to 2016. Contrary to theoretical expectations, we find that fossil fuel divestment does not seem to impair portfolio performance. These findings can be explained by the fact that, so far, fossil fuel company stocks do not outperform other stocks on a risk-adjusted basis and provide relatively limited diversification benefits. End quote. Thus, we have a compelling case for fossil fuel divestment. Continuing on a related theme, Max Chatsko of the Motley Fool has his top solar power energy stock picks in a post titled 2 Top Renewable Energy Stocks in Solar Power, appearing on NASDAQ.com. In my last podcast, Mr. Chatsko picked his top wind energy stocks. By the way, his new stock picks were top choices for analysts in my previous podcasts. It just shows the potential for these particular stocks. Mr. Chatsko's two picks are Solar Edge Technologies and Enphase Energy. He has this to say about Solar Edge, I quote, the company develops integrated inverter systems that maximize power output for solar panels and reduce the cost of electricity produced. In the last 6 quarters, Solar Edge has acquired a provider of uninterruptible power supplies, a maker of lithium-ion batteries, and even a company that develops powertrain and electronics for electric vehicles. That shows the company is eager to maintain and expand its presence in the clean energy markets. With shares trading at just 17 times future earnings after a recent pullback, investors with a long-term mindset might find plenty to like about this solar stock." End quote. On Enphase Energy, Mr. Chatsko writes that Enphase Energy develops and supplies microinverter solutions that help maximize the electricity output from solar modules. Enphase, the leader in microinverters, delivered $24.6 million in operating income in the first 6 months of this year, compared with an operating loss of $3 million in the first half of 2018. Enphase is preparing to launch the first products with the next generation IQ8 microinverter, which boasts a 31% increase in computing power versus its IQ7. That could allow for smaller, more efficient, and even simpler products for customers. Throw in the expected launch of residential energy storage products by the end of 2019, and this solar stock could have multiple growth opportunities. End quote. More ESG stock picks come from Evan Harvey, Global Head of Sustainability at NASDAQ. They appear in a post titled, "This correlation between ESG investing scores and high returns may surprise you," written by Elisa Coram and Justin Nielsen on the Investors Business Daily site. The 3 ESG stocks Mr. Harvey likes are Akamai Technologies, Texas Instruments, and Comcast. On Akamai Technologies, Mr. Harvey says, Akamai stock is all about the infrastructure for the Internet as the largest content delivery network service provider. Between security solutions, e-commerce, and video streaming, they touch on a lot of areas seeing massive growth. End quote. Concerning Texas Instruments, he says, quote, "Semiconductors are notoriously cyclical, so it helps to understand where you are at in the chip cycle. They started the year out great, but have had a tough time since China trade war concerns have intensified. But with optimism on the direction of talks on tariffs, chip stocks started showing relative strength." End quote. And on Comcast, Mr. Harvey says that Comcast is a great example of how top-rated companies exist in the ESG space. While many people focus on the impact of cord cutting on Comcast's cable business, it's just as important that the cord cutters still need internet service. Comcast is offsetting losses in video subscriptions with gains in broadband subscriptions. The profit margins on broadband are much higher, leaving little incentive to fight for the lower value video subscriptions. With a push for expansion in wireless mobile, it's a very different bundle that Comcast stock will be pushing in the future. End quote. Because ethical and sustainable investing is gaining mainstream acceptance, it's not surprising to read Sankamitra Saha of Zacks article titled 6 ESG ETFs close to or above the $1 billion asset mark. The article found on Yahoo Finance as well. Ms. Saha reviews each of the 6 ESG ETFs. Here's what she says about each one. Quote, 1. The iShares ESG MSCI USA Leaders ETF, assets under administration $1.61 billion. Comprises U.S. large and mid-capitalization stocks of companies with high ESG performance relative to their sector peers. It charges 10 basis points in fees. 2. iShares MSCI KLD 400 Social ETF, assets of $1.55 billion, is a free float adjusted market capitalization index designed to measure the equity performance of U.S. companies that have positive ESG characteristics. The fund charges 25 basis points in fees. Third, Xtrackers MSCI USA ESG Leaders Equity ETF, assets of $1.5 billion, is a capitalization-weighted index that provides exposure to companies with high ESG performance relative to their sector peers. The fund charges 10 basis points in fees. Fourth, iShares MSCI USA ESG Select ETF, assets of $1.18 billion, comprises U.S. companies that have positive ESG characteristics. The fund charges 25 basis points in fees. 5. iShares ESG MSCI EAFE ETF, assets of $969.5 million, comprises large and mid-capitalization developed market equities, excluding the USA and Canada, that have positive ESG characteristics. The fund charges 20 basis points in fees. 6. iShares ESG MSCI USA ETF, assets $967.05 million, comprises U.S. companies that have a positive ESG characteristics while exhibiting risk and return characteristics similar to those of the parent index. The fund charges 15 basis points in fees. End quote. Now, while on the subject of ESG funds, Annalisa Esposito reports on the Morningstar UK site that ESG funds beat non-sustainable sister funds. And quoting her, she says that investors would be better to pick ESG funds rather than their non-sustainable counterparts, according to research by a fund supermarket interactive investor. Morningstar data analyzed by the firm reveals that funds taking environmental, social and governance (ESG) factors into account in their investments have performed better than their non-ESG sister funds. End quote. Whether the same is true outside the UK hasn't been demonstrated to my knowledge. However, it's one more great reason for investing in ethical and sustainable funds compared to their conventional equivalents. For the fixed income side of your portfolio, green bonds are well worth considering according to many analysts. In an article titled "Green Bonds Are Getting Hot on Wall Street," ETF Trends features the Van Eck Vectors Green Bond ETF. Among green bond funds, the writer of the article states that the Van Eck Vectors Green Bond ETF, the first fixed income ETF offering exposure to green bonds, has been a solid performer this year, gaining nearly 4%, while currently yielding around 1.3%. Those are modest but decent numbers, but the appetite for green bonds is increasing, and that could bode well for GRNB going forward. End quote. Illustrating how big green bond issuance is becoming, financial writer Todd Schreiber quotes Bloomberg concerning the huge increase in green bond issuance this year. Bloomberg says global green bond sales have already beaten last year's record, $135 billion, well before the end of 2019. Issuance of the securities has more than quadrupled in the past 5 years, according to data compiled by Bloomberg. End quote. To help U.S. ethical and sustainable investors create stock and bond portfolios reflecting their personal values, Investopedia just announced its best 2019 robo advisors for socially responsible investors. It concluded the 4 best are M1 Finance, Motif Investing, Interactive Advisors, and Personal Capital. For links to those robo-advisors, see this podcast's webpage. Go to investingforthesoul.com/podcast and scroll down to this episode. Incidentally, there is another, and some would say preferable, simple and cheap way to create a portfolio that aligns your investments with your values. Check out my 1-hour DIY ethical sustainable investing page tutorial. Go to investingforthesoul.com/podcast and look down the right-hand sidebar for the link. So these are my top news stories and tips for ethical and sustainable investors over the past 2 weeks. Again, to get all the links or to read the transcript of this podcast and sometimes get additional information too, please go to investingforthesoul.com/podcast and scroll down to this episode. And be sure to click the like and subscribe buttons in the iTunes Apple Podcasts or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. That way you can help promote not only this podcast, but ethical and sustainable investing globally and help create a better world for us all. Please don't hesitate to contact me if you have any questions about the content of this podcast or anything else related. Now, a big thank you for listening. Come again, and my next podcast is scheduled for October 11th. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY ethical sustainable investing page tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.